everyone, welcome to the video. Thank you for your time to click and watch this video. For this time, I would like to share my learning journey in corporate finance class at IPMI International Business School, which conducted by Prof. Sambo through a mind map methodology. Before I start the presentation, I would like to share about the most memorable lesson learned that I got in the class. The first lesson is it's okay for us to make mistakes because from our mistake, we gain more knowledge and new experiences. The second learn is the active learning. We should make ourselves become more active by doing a personal research and the interaction in the class. Okay, everyone, let's move on into the presentation. In this corporate finance course, we learn and understand about the corporate finance as the party that regulates a company's finance. This finance division takes care of how the company funding sources, capital management, and investment decision. We also learn corporate finance is a primarily concerned with maximizing shareholder value through long and short-term financial planning. For the first chapter, we learn about the financial management. The objective of financial management is an optimization through an orchestration of internal and external resources towards significant and sustainable value creation. While running business between management and investor, there's also a different interest. There are potential of conflict between both parties, the management and the shareholders. In this part, we learn about the principal agent problem that cause of three things. The first is conflict of interest, second is asymmetric information, and the third is moral hazard. Moreover, the one thing that can minimize the potential of principal agent problem in the company through the good corporate governance or GCG. Good corporate governance will promote the transparency, accountability, responsibility, independency, fairness. And according to Prof. Ramcharan, an international businessman, there are 5 business essentials. There are cash, profit margin, velocity, growth, and customer focus. The next chapter, we learn about the capital budgeting. This is an application of a time value of money. We learn about estimate expected future cash flow. There are several methods of capital budgeting that we learn in class. First is payback period. Second is net present value and profitability index, also internal rate of return. In summary, NPV is the best method for capital budgeting because NPV is better in situation where there are varying direction of cash flow over time or multiple discount rates. We also learn about the rule of 72. The rule of 72 is a simple way to determine how long an investment will take to double given a fixed annual rate of interest. By dividing 72, the annual rate of return, investor obtain a rough estimate of how many years it will take to the initial investment to duplicate itself. The next chapter, we'll learn about the capital structure. Capital structure is the particular combination of debt and equity used by a company to finance its overall operation and growth. Equity capital arises from ownership, shares in a company, and claims to its future cash flow and profits. Debt comes in the form of bonds issues or loans, while equity may come in the form of common stock, preferred stock, or retained earning. Short-term debt is also considered to be part of the capital structure. The capital asset pricing model, or CAPM, is a model that describes the relationship between the expected return and risk of investing in a security. It shows that expected return on a security is equal to the risk-free return plus a risk premium, which is based on the beta of the security. The next chapter, we'll learn about the investment strategy. An investment strategy is a plan designed to help individual investors achieve their financial investment goals. Investment strategy depends on personal circumstances, including age, capital, risk tolerance, and goals. There are 5 parameters of financial statement. First is profitability, liquidity, activity, leverage, and profitability ratio. Profitability measures a company's ability to generate income relative to revenue. And liquidity ratio are financial ratios that measures a company's ability to repay both short and long-term obligations. Activity ratio, or as known as efficiency ratios, are used to measure how well a company is utilizing its assets and resources. Leverage ratio measure the amount of capital that comes from debt. In other words, leverage financial ratio are used to evaluate a company's debt level. Profitability ratios measure a company's ability to generate income relative to the revenue. In this chapter, we also learn about the portfolio theory to analyze and monitor selected stock in 8 weeks with the grand strategy with our group. The next chapter, we learn about the corporate restructuring. Corporate restructuring is a plan to change a corporate structure, operation, or management. Corporate restructure can be either voluntary or involuntary. Voluntary restructuring are initiated by the company itself and usually involve financial distress. In this chapter, we learn a corporate restructure from RGR Nabisco case through leverage buyout method. Leverage buyout method is a once company acquisition of another company using a significant amount of borrowed money to meet the cost of acquisition. The assets of the company being acquired are often used as a collateral of the loans along with the asset of the company acquiring. In the Nabisco case, there are 5 steps by doing leverage buyout action. The first step is KKR buys a bit of RGR Nabisco. Second step, KKR proposes to buy the rest of the share. Step 3, KKR become the RGR management and issue debt. Step 4, cash from issue debt is used to buy the rest of the public share and KKR become the sole owner. Finally, for the last step, KKR managed the RGR to realize the planned added value in the beginning. In this chapter, we also learn from the book, and the title is How to Make Money in Stock, written by William J. O'Neill. Generally, this book is taught to reader as a beginner investor to have a strategic way by managing the portfolio stock by combining a technical and fundamental strategy. The strategy is summarized into an acronym that familiar with Ken Slim's strategy. C is for current quarterly earnings, A is for annual earning, N is for new products, S is for supply, L is for lead and lagging, I is institutional ownership, and M is for market direction. The next chapter, we learn about the fraud management. Fraud management is based on the analysis of the activity of a company, institution, or organization that are susceptible to fraud, disloyalty, or breach of trust in its financial relationship. In the segment, we learn about the fraud triangle that causes in financial situation of a company. There are rationalization, perceived opportunity, and pressure. To solve the fraud action, management must have a comprehensive solution as well. But there are the guidance to manage them well as a fraud anticipation that consists of employee ethics, protect security, and whistleblowing mechanism. In this chapter, we also learn from a movie. We do a movie review from Wall Street, Money Never Sleeps. This movie, we learn about the insider trading, shenanigans, or financial manipulation, and we capture a good quote from the movie Thus, the grade is good. And final discussion, we agree that grade is good for expression for the patient to get better knowledge and better life. Last but not least, the last chapter we learn in the class is about the dividend policy. Dividend policy is concerned with financial policies regarding paying cash dividend in the presence of paying an increased dividend at a later stage. Dividend payment to the shareholder can create good impact to the company as long as it consistent to give a dividend because it gives positive image of the company, that meaning company have a good of cash flow, and also it gives a tax benefit and financial distresses. Okay, everyone, that's all about the presentation of mind mapping regarding the corporate finance class assignment. I hope you enjoy and like the video. Don't forget to give it a thumbs up and subscribe the video. Thank you for your time and see you next time. Bye-bye.